Welcome to the Digital CAD Advantage. Today we'll explore why virtual banking is transforming Canadian finance and how you can use it to reduce fees and increase your returns. We will discuss how digital-only banks pass savings from eliminating physical branches to customers through higher interest rates and zero-fee checking. We'll also cover Know Your Customer verification, deposit insurance basics, and a practical checklist to switch. To set expectations, this video is educational and not financial advice, so always verify details directly with providers. Now let's start with what we'll cover. Here is today's agenda. First, we define virtual banking and why it matters in Canada. Next, we dive into KYC, safety, and deposit insurance. Then, we compare traditional branch banks to digital-only institutions. After that, we walk through a one-week switching plan, followed by a rate shopping playbook. We'll reinforce your understanding with quick quizzes, and finally summarize key takeaways along with an important disclaimer. Let's begin with the basics. Virtual banks are licensed financial institutions that operate entirely online. Because they don't maintain branch networks, they have lower overhead, and that cost advantage can be passed on to customers in the form of higher high-interest savings account rates and zero-fee checking for daily transactions. The key takeaway is that the digital model aligns the bank's cost structure with customer value. Now that you know what they are, let's see why the economics work in your favor. In Canada, virtual banking matters because it can directly lower your ongoing costs and raise your interest earnings on CAD savings. The flowchart shows how traditional branch networks lead to high overhead, which forces higher fees and lower savings rates. In contrast, digital-only banks operate leanly, lowering costs and enabling zero-fee checking and more competitive HISA rates. You also get fast setup and mobile-first convenience. With fewer physical constraints, virtual banks often price more transparently. With that context, let's move to the crucial topic of safety and how you're protected. Safety starts with KYC, or Know Your Customer. Any legitimate Canadian dollar virtual bank will perform full identity verification. If a service does not verify your identity, that is a red flag indicating it is not a protected financial institution. KYC ensures your account is legally registered in your name, which enables consumer protection mechanisms and potential deposit insurance coverage. Having established the importance of KYC, we can now examine deposit insurance details. Deposit insurance in Canada is typically provided by the Canada Deposit Insurance Corporation for member institutions, generally up to $100,000 per depositor, per insured category, per member institution. Credit unions may be covered by provincial deposit insurers, with coverage varying by province. Always verify both eligibility and membership on official insurer websites. Insurance coverage depends on product type and category, so confirm what's covered before funding your account. The pie chart is illustrative of how traditional fees can be influenced by overhead and other costs. Use it to understand incentives rather than as an exact breakdown. With safety covered, let's map out how to switch efficiently. This timeline outlines a practical one-week switch. Day 1. Research and shortlist credible virtual banks. Days 2 to 3. Apply online and complete KYC by uploading identification. Days 3 to 4. Link your existing bank account using micro-deposits or secure connections. Days 4 to 5. Move initial funds and set up direct deposit for income. Days 5 to 6. Configure bill payees and pre-authorized debits. Day 7. Move recurring payments and only close your old account after all outstanding transactions clear. Now that you see the schedule, let's compare the models head-to-head. Traditional banks maintain branches, which increase overhead, often resulting in routine account and transaction fees and lower base HISA rates. They may offer in-person service and cash-centered features, but can be slower for onboarding and changes. Virtual banks, by contrast, operate without branches, reducing costs. They frequently offer zero-fee checking, free e-transfers, and more competitive savings rates. Their mobile-first approach accelerates onboarding and account management. With the comparison in mind, let's turn to a practical checklist for evaluating options. Use this checklist to compare providers. Focus on the base, HISA rate, and clarity around any promotional terms. Confirm zero monthly checking fees and unlimited or generous e-transfer allowances. Verify KYC, two-factor authentication, and data security measures. Confirm deposit insurance via official membership lists. Ensure transfers, direct deposits, and bill payments are easy and fast. Finally, assess support options for responsiveness. Next, We'll walk through the step-by-step switch. First, shortlist 2 to 3 virtual banks using the checklist. Next, verify deposit insurance membership directly on the CDIC or provincial insurer's site. Then open your chosen account and complete full KYC. After that, link your old bank and perform micro-deposit verification to ensure transfers work. Move initial funds and switch your payroll direct deposit. Add bill payees and schedule recurring payments to prevent missed bills. Finally, monitor all transactions for a full billing cycle before closing the old account. Now, let's test your understanding with a quick quiz. Quiz time. Which statement best describes KYC in the context of Canadian virtual banking? Option A. It's optional if you only use savings accounts. Option B. It's required to legally register the account to you and enable protections. Option C. It's only for business accounts. Option D. It's a marketing term with no regulatory meaning. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is that KYC is required to legally register the account to you and enable protections. Without KYC, services are not protected financial institutions and you lose critical safeguards. With that confirmed, let's continue with the second question on insurance. Second quiz question. How should you verify deposit insurance for a Canadian virtual bank? Option A. Trust the bank's homepage banner. Option B. Check the CDIC or provincial insurer's official member list. Option C. Ask a friend who uses the bank. Option D. Assume all banks in Canada are insured the same way. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is to check the CDIC or provincial insurer's official member list. This ensures you're relying on authoritative data, not marketing claims. Coverage can vary by product and jurisdiction, so confirm details before depositing. Now let's shift to a practical rate shopping playbook. To maximize your CAD returns, start by using rate aggregators and filtering by base HISA rate, promotional duration, and any qualifying conditions. Compare base versus promotional rates carefully. Promotions expire, so the base rate drives long-term performance. Ensure your checking is truly zero fee, with unlimited e-transfers and no minimum balances. Set reminders to revisit rates at least quarterly, because rates change and loyalty often costs you. Reinforce security with two-factor authentication, strong unique passwords, and updated devices. The Markdown tip sheet highlights the essential data to track and verify. With tactics in place, let's capture the key points. The core points are straightforward. Virtual banks can pass on branch savings as higher savings rates and zero-fee checking. KYC is non-negotiable, and a lack of verification is a red flag. Verify deposit insurance on official sites and understand category limits. Rate shop frequently because loyalty is not a strategy. Finally, switching can be completed quickly if you follow a clear plan. Next, an important disclaimer. This content is educational and not financial, legal, or tax advice. Always verify rates, fees, terms, and eligibility directly with institutions. Confirm deposit insurance membership and limits on official insurer websites such as CDIC or provincial bodies. Your individual needs and risk tolerance may differ, so consider consulting a qualified professional. With that understood, let's wrap up. In summary, digital-only banking can convert lower operating costs into customer value through higher savings rates and lower fees. Full KYC is essential for legal registration and protection. Verify deposit insurance membership and limits on official sites. Comparison shopping usually beats loyalty, so prioritize base rate performance. Finally, use the 7-day plan to execute a smooth switch. To close, here's a quick thank you and a call to action. Thank you for watching. If you found this video helpful, please like, share, and subscribe. In the comments, share which virtual bank feature saved you the most money or time. Your insights help the community make smarter choices.